We're looking at Gary's weekly report, Blue Chip Investor, and we're going to have a look at the indices. We're going to have a look at a few of the portfolio positions to understand where the profit targets are coming up and whether it's worth holding on for more. Then understand, well, are there opportunities within the market and what do they look like? Gary Glover's done the heavy lifting, he's done the research, and he's here to guide us through. Good morning, Gary. How are you?
Yeah, no, good, Chris.
So, looking at this week, we know we had the 50 basis point drop in the US indices. We know that they're up near their highs. The question is, has it actually changed much of your outlook for the indices themselves, or is it kind of steady as she goes, no real reason to change your outlook and how you're interpreting the charts?
Yeah, I mean, the only thing is, I guess at the moment, it's sort of, everything seems to be sort of falling into place for the markets there. And I mean, this market really has climbed the wall of worry pretty much the last 2 years. So the only negative thing is that I think some of those worries, a lot of the worries are still starting to disappear. So there's still a couple of issues, obviously, in the Middle East and stuff there. Still got a few little issues out there, but I think the moment we have no more worries, Chris, will be when I get really worried. So so I think, look, the market's still running high, looks pretty positive. And so we know election years typically sort of run up. We don't have big corrections in these years, so we haven't really seen those as well. So I do think it will sort of grind higher here. Just kind of feels like we're going to sort of grind it out into the US election game, really. So it might get a little bit, the normal sort of seasonal pattern actually is for that US election is to probably weaken up a little bit into the US election. The people get a little bit uncertain about who gets in and what it means for markets. Markets often rally coming out of the US election, which is always, sometimes it's the unknown going into election, and then, whether it's the devil or you don't know, at least you sort of got the certainty is out of the way. Then markets tend to sort of rally from that, and that's often the sort of the classic sort of setup for election years. But this has been a little different this one here. So we've sort of we've bypassed quite a few of the normal sort of seasonal patterns. Been running up very similar to the 60-year sort of stuff, and that, like the 60-year ran all the way through to around the 20th of November from history, from memory, before it had a bit of a pullback there. So we just might sort of grind it out here a little bit further here, but still looking pretty solid overall. I guess it's just important to keep seeing that rotation, Chris, as well. We don't want to see, I think once everything's running all together, that's probably what you don't want to see. Like we're seeing, obviously, the banks cool off and then resources bounce. We saw rotation, and we saw some of the healthcare names bounce earlier in the year as well. So we've just seen some rotation. We've seen definitely some sectors sort of rotate back in the market there. So it's nice and healthy. But I think if we see all the sort of, we start to see a lot of the facets of the market all running together up until whether that's, December or January. I don't know what that's going to be, but that might be, something to be mindful of there. So, so I still think the first half of next year is going to be probably the danger zone for equity markets. But it still looks pretty positive for the, for the balance of the year. Just might get a little bit of activity around that US election. So whether that's post the election or pre the election. But again, it probably shouldn't be too large. I think even the 60-year cycle didn't get particularly large moves around there. So, yeah.
All right. So then we're steady as she goes on the S&P 500 and NASDAQ. You've talked about the rotation that we're seeing within Australia and the importance of us having not all of them running hot at the same time. Materials, financials, I guess that's all the companies at one end of the seesaw. If the tide turns, they fall at the wrong end.
I think all those indices, Chris, they all look pretty similar. They've all just sort of, they've hit some resistance there previously, sort of congested back, and now we've all sort of started to push through above some old sort of resistance points. So, they're all looking pretty strong here. You just might find they might just sort of do that classic, we've had that pretty strong run, and then we might just do that sort of grind up on its side there, which we often see from all those indexes as well. So, particularly now we've seen a bounce from resources. We're seeing banks come off, but they're bouncing again as well. So you just might see maybe this rally here just maybe grind slightly higher here. That's what I think will probably happen here. So But I think that's probably for all the indices there, to be honest with you. So, yeah.
Okay. Well, then that brings us into where are the opportunities? And we know from the portfolio, we'll just scroll back up quickly for those who want to have a quick snapshot, screenshot, pause screen, that kind of thing. These are the portfolio positions you've been sharing with clients. Obviously, you've done a few other ones as well that we talk about on Friday and the likes. But you're looking at taking profits on MA Financial. So we've seen this trawl out and we've got 0, 1, and 2, and 3. But then we've got 0, 1, and 2 here. So a bit happening in this trawling at the bottom, but you're also looking at taking profit out of this movement here. So what's MAF got for you? Is it take profit and then keep it on the short list, or how do you see it from here?
Yeah, I think MA Financial is sort of a bit like, to be honest, they're like Aussie Broadband, I think CCP, just, like a lot of their stocks reported pretty well, reporting season. So we know when they report well, they tend to sort of go on with it as well. So it's been one of the ones that's sort of reported pretty well and gone on with it. So it's just gone back up to the old high early in the year there. So I'm probably hoping we'll see some resistance here. It has pretty much, it's gone up and went up impulsively. Then it did that sort of sideways grind there. I know McLaren talks about this ascending grind, and it sort of powered on as well. So it really hasn't had any consolidation, any pullback at all. So I think it's probably due for some sort of consolidation. So I'm hoping it'll probably pull back here, maybe consolidate under that sort of, maybe set up a handle. So I do think this one looks pretty good longer term. Just be nice for us to come back to 540, 530, something like that. Set up a handle, maybe go again here. So just sort of take some profit here, and hopefully it'll settle back and give us an opportunity there.
Nice. So that's MAF taking profit and keeping on the short list, the watch list.
Yeah. It is a market there where sometimes these stocks are just continuing to keep running as well. So I probably, there's a chance there I might regret taking this profit here. I do like the stock here, but you could keep going. This is a market where we're definitely seeing momentum push things a lot higher than in the past there. So, but you've got to trade what you see. So, yeah.
Well, that brings me to Credit Corp. So I know we've talked about this one a few times, and the potential for it to actually overshoot, because you've studied this one more than what we just see on the daily chart that's on screen here. So what is it in the history of Credit Corp that has you thinking exactly that? In this market, we can overshoot those highs, and it is possible to hold it. So what is it about Credit Corp that has you interested in that specific aspect?
Yeah, look, I always felt like the sector was going to turn to this company anyway. So all the free money over there, eventually we're out and the normal credit cycle will return, and that will be quite good for these guys. It's just taking a bit longer to get to that point than I thought. But it did report well. And that was that big sort of spike there. And then it sort of came back here. We sort of know if they do well on that reporting date, tends to sort of, if you look down the track for the next 3 months, most of those stocks tend to do pretty well if the market, likes them on reporting date. So even though it went up for a few days and that sort of came back down again, I still think it's pretty positive. And they had a pretty positive outlook statement too, around 25 and 26 as well. So just felt like once this one sort of came back here and started building again, it's going to be pretty good. It's just this one's taken a bit longer than I thought here. But the great thing about these bases, when a base takes a long time, there's that phrase that like the longer the base, the bigger the move, potential companies. So it's taken a bit longer to get going here than I thought. But the good side there is that's that big base there can mean it can be a pretty big move here. It's just starting to accelerate there now. And even like the last couple of days, we've seen a couple of down days. No volume coming into those down days, but it's pretty light. So, and it's been one of those stocks where like a lot of stocks will go back up to old highs and then ingest under them and push through. I went back and studied this stock here. It tends to actually go to new highs, pull back, and then go to a new high again and pull back. So it does sound a little bit different from normal stocks, but so I sort of expected to go to maybe 18 and maybe come back to 17, maybe go to 19 and maybe come back to 18, something like that. That's kind of how this thing moves in the past. So, but there's nothing negative I can see here so far. So I think this looks pretty good. It's one of our biggest holdings. So in the model portfolio, so I think it looks pretty decent there. So I mean, I just move your stop up to around that, I think around that sort of 50-day moving average there at the moment. I think that's far enough back here. give ourselves a bit of room here, but I think it looks pretty constructive. I think this looks like it can go back and retest that old high. Right?
All right, well, hopefully it can retest its old high. Another position in the portfolio is block SQ2 Square. This chart, hopefully what you're saying is that the bigger the base, the bigger the breakout can be. This is narrow as base, though. We've got a pretty wide range, 130 to 60, so it's not super narrow, but it has pulled back from its high.
Yeah. It's got that sort of, inverse sort of head and shoulders pattern, and I don't really like that pattern myself. But you can, we sort of do have that sort of right shoulder down here and it's turned up here. But I think this sort of consolidation pattern is the one that I'm probably more prone to. And that's sort of broken out of that sort of that downward sort of consolidation pattern as well. And we've sort of seen some pretty good volume down at the low. So there's sort of signs of accumulation occurring here. We've also got the fact that the sector is pretty buoyant. So lots of stocks in this sort of payment space have done pretty well here. So it is a sector where we're sort of seeing a bit of growth there. So we know sort of from Stan Weinstein sort of studies there that you're buying. We know sort of sister companies in the strong sectors tend to do pretty well. And if the whole sector is doing well, then all the companies in that sector tend to do pretty well as well. So interesting here when it's broken out of that little downward channel wedge there. But if you drill into the daily there, we've actually got a 0.12, Chris, at the moment. And potentially if we did pull back and get another high low here, I think if it came back to maybe 100 and turned up there, give us potentially just a nice little base starting to sort of develop here as well here. So just think of this. I watched this pretty closely though. I've already got a position here at 95, but I think if it sort of pull back into around 100 and set up a third high low, that's something I would really look at there, because that's sort of, it's done, again, it's a bit like CCP. It's done a lot of work here, build a bit of a base, and then that's when we sort of get going there. It's a bit, a bit like the old ResMed there, rather than sort of sit through the three high lows, we just sort of come in at the end, and we're able to get the juiciest part of the move here. So, so it might be a bit more work to do for CCP, but that's looking really interesting on the daily chart as well.
Well, it's good to see that. But we've also got some New Zealand stocks to follow up on, because you had said that possibly they could be the next China with the amount of stimulus coming through. In the last week or so, the amount of Chinese stimulus announced or lack thereof hasn't really got the markets firing and seen indices come back. That doesn't take away from that massive stellar run that the indices had in such a short burst. And we don't need it to be for too long, just long enough for us to take our profits. So Spark, it has had that move. You've got some times on here. You've got some 36-week windows. What's the main thing that you're looking at in this chart today? Because we've looked at it a few times before. So what's the main aspect today?
Yeah, we've had 75 basis points of cuts there in the last, had 25 in August and then 50 basis points in September here, just the last week here. So, some big, stimulus for the New Zealand economy there. So it puts a lot of money back into New Zealand, sort of holders there, puts money back in their hands here. So just should be sort of good for discretionary spend there. Should be good for that builders as well. I think a lot of those, like a lot of the Kiwi stocks have really been sold off really ultra aggressively. So it's dangerous to be sort of buying sort of deep lows here. I understand that there, but this is, I think, forecast to be around 25, 26 cent dividend next year, Chris. So we're looking around 8 or 9% yield here. So don't mind maybe coming a little bit, maybe a touch early here, but I just there's a few fib levels here. There's a bit of timing here as well, like a bit of a 36-week cycle around here as well. So just like the fact that we're really deep here, what's really catching my eye the most there is actually the volume for the last 2 weeks. When we had 27 million traded there in that 1 week alone there, and we've had some pretty big weeks sort of back to back there. So, I'm guessing there's probably close to 10%, maybe even 12% of the company's been traded in those 3 or 4 weeks there. So,
and I want to quote you because you said this so many times that viewers probably do know it. Big volume either happens at the top or the bottom. That's the accumulation or the distribution.
Yeah.
Look at this chart, go out on a limb and say it's probably not the top.
Yeah. So that's the question is it accumulation or distribution? It's probably not distribution down this low after, copying a fair beating as well as stock here. So, so look, you've got a bit of timing here. Yeah, capitulation sort of style. I think you've got a catalyst as well for for sort of much type of the stock here. So, we'd probably like to see New Zealand government, maybe come in as obviously that sort of had sort of reprieve with the interest rates there, but I guess some other catalysts there might be useful as well. Just feels that New Zealand economy has been struggling. I mean, if you look at Fletcher and New Zealand have both done equity raises there, Chris, as well. And that's sort of synonymous too with those typically get done at the lows as well. So you've just got all the hallmarks there of that sector being on its I mean, I know Michael Burry was looking at the Chinese equities there 3 or 4 weeks ago, looking at the value there. I think if he had a look at sort of some of these New Zealand equities, sort of you might be sort of seeing some value in there as well, But I think there's a pretty interesting here, really. And just all the hallmarks are there for a bit of a deep play. So sometimes you like to sort of see it building, and it's sort of safer to be coming in later here, but we've just got all the hallmarks there of a nice sort of deep washout low here.
Well, I remember last time you were looking at Auckland Airport, probably about 18 months, 2 years ago, and two of the week after week you were putting it in there. I know I traded it using that, and it was a good return. So you've got Auckland Airport in there once again. Same sort of story. We've got the backdrop of the New Zealand economy, 75 basis points worth of drops in the last 2-3 months, and hopefully some more stimulus coming. We've seen what's happened in this type of environment with China getting a shot on stimulus, and it can shoot up. Michael Burry was there beforehand. So is it the same sort of dialogue here for Auckland Airport? Is there anything extra on the overlay with sort of coming down and undercutting this low?
Yeah, I got the false break there, which I do like to sort of see. Big, large ABC sort of correction as well. So, it's a bit of geometry in that move. So, yeah, it's just sort of, and we've had that equity raising done here as well. So we've, paid down a lot of the debt. So with, I do remember like probably been harsher lockdowns as well in New Zealand as well. So, so I think the outlook there for travel out of New Zealand is pretty buoyant there. So I think sort of seeing numbers sort of recover to post sort of pre-COVID levels there. So I think the outlook looks pretty good there. As we know, Chris, just not a lot of infrastructure assets on the market here anymore as well. So although the yield's not cracking, the asset is a pretty good asset there. Most of those assets have been mopped up. Sort of by private entities there. So, I think it's, just puts this one on the radar for me personally. So, yeah.
Right. Well, if we look for a new one that we haven't seen a lot of analysis on, we don't see as much coverage for, and it's been a while since we've seen your report. PWR Holdings, just quickly reading your report here, they're a supplier of cooling products in the auto industry, which does include hybrid and full electric model vehicles. So they do have their outlook towards the future of automobiles as well, not just the internal combustion engines. And interestingly, I see on this chart, we've had a consolidation earlier and then it's shot out the gates with it. We've got a bit of a consolidation here, slightly higher, but just undercutting those previous lows. So how important is that movement and what's happening right now with that congestion and high volume then petering off?
Yeah, look, so if you look at that weekly chart there, obviously you'd probably be a bit worried that's kind of tipped over that trend line, but it did break that trend line previously, come back in again, But if I zoom out to the monthly there, it's really that sort of low in 22 and then the low in 23. They're more pivotal, and I think we've probably just I think they all were pretty close to the 50-month low as well. Those two lows. So this move where we are right now has come back down to the 50-month low on the monthly as well. I could have put it in there, but I just don't see as much detail on the monthly. But just interesting there, we've just sort of undercut this last little low here. And you've definitely seen volume up here as well. Yeah, so definitely seen some big volumes there. So the fact that it hasn't broken below and then gone through, it's actually reversed there. it's a bit of a false break and undercut there as well. And look, it's a pretty strong growth there. And I say those definitely that sort of hybrid EV sort of crawling folks as well. Definitely has been a growth area, so it could continue to be as well. So yeah, like the long-term chart still looks pretty constructive overall, even though that there is a bit of a break on that weekly there. But we do know that some of the stronger names, they will come back, undercut the last low and then bounce from there. So it looks pretty interesting here. So this is one to sort of keep an eye on there, on maybe the daily there, just wait for a little tightening up there. But yeah, it could be one to watch.
Right. Well, News Corp, an old favourite. If you were trading the market 20 years ago, this was right up there in the blue chips and a large weighting in many portfolios. Different story today, but gets headlines, produces headlines for its own internal things that are happening there. But we're looking at the chart and we're seeing that it is in the top right. So it's on the top half of the chart that you've talked about many times in your Friday videos. And we've got this, is this retesting, has it undercut? Can't quite see just zooming in there. What's caught your eye today?
Yeah, it's just now that, man, look, the trend's been pretty robust, pretty strong as well, Chris. So this pullback there has been pretty tight so far. It hasn't had a right through it. It's probably smaller than the last correction as well. We did have a bit of a pullback, and then a bit of a retest, and then come back and undercut that little low as well. So we know we sort of see these little false breaks in some of these stronger names there. They can go straight back up as well. So this little undercut in these sort of stock showing relative strength can be really good trading signals. So yeah, this looks pretty, it's pretty positive to me. So we've added a position in there in the last day here at 40.90, and then just with a stop under that low, nice and pretty tight here. But yeah, if it moves up here, it can get. I've just seen quite a few of these here recently. I think TLX, I think NXT as well. So just quite a few of them have sort of done these sort of undercuts and then gone on with it. There, I think car sales did a couple of them. Just some of the you see them in the stronger names, just a little undercut of the last swing lower, then go high here. So it does look pretty good. The good thing about these little undercuts, Chris, is that when they come out of them, they tend to come out of them fast. So not like you're sort of sitting there waiting, like something like a Spark or an AIA. I'm probably going to have to be patient with those. They're probably going to take months to build. Whereas these ones here, that sort of these strong names, when they undercut the low and reverse there, they can go to get highs pretty quickly. So yeah, that's the beauty of those sort of setups.
Nice. Well, the last one, Calix, CXL. Looking at this chart, this is the opposite. We've just gone from a top right chart to a bottom right chart, but the range and the volatility just sits pretty nicely within this downward sloping wedge that you've drawn, and to the point where it's like really narrowed. Where it has come to the narrowing, we have seen escalated volume, which you've highlighted down here. And it seems like we've gotten on with it. We do have a weekly chart, so that is dwarfing the magnitude of the movement that we're seeing down here percentage-wise. Log scale, it would have been different, but this really does help show we've fallen from 950 to I can't quite see where. So first off, the fall, and then the basing, the volume, and then the opportunity. How do you see those?
Yeah, so I noticed a few of the stocks in the same sector, Chris, so the Vulcan Energy VUL, which I think I might have featured there a week or two ago, it started to break up and started to move there. So we know that sort of green, as that both of those green energy stocks have, underwhelmed here and pulled back, but just starting to see a bit of a movement in some of those stocks there. So I think VUL's in geothermal and lithium there, but I see CXL's in that sort of decarbonisation space as well. Another sort of environmental, technology, that green sort of space there, but just a few of them are sort of starting to come to life here. But what we see here on CXL is that definitely seeing, months here of heightened volume there. So it could be accumulation taking place down here. And we have just sort of like, there is a massive descending wedge there sort of on the, if you drill into the daily and the weekly, there's sort of there's a big one and a small one there, but we've broken out of both of those. And the volumes have sort of picked up, and we're just starting to see a little bit of tightness in the consolidation there, and starting to see it actually move up with a little bit of volume. And more importantly, we've stopped seeing it go down on heavier volume. Seems to be really lightening up on the down days, so not really having that follow through there. So possible change of character. You can see the last 2 or 3 weeks there, the last 2 weeks in particular, I've seen no volume at all. So while it sort of pulled back and had a bit of a pullback there, it hasn't sort of taken out there. So we're just starting to see a few high lows getting established. So it's often how some of the, I think Coda had that mean downtrend and then you return there and build a bit of a base like this and then eventually get going here. So just see some possible early signs here, some green shoots. So it's one that I just started with a small position there because I thought this one potentially could build here. Yeah, we just know to feel the stocks are moving there. So, we do want to be in sectors that are heading in the right direction. Just some signs of accumulation there as well. But look, it's definitely got some risk, this one, because it's pretty nasty sort of mean downtrend. But just possible change of character for me might be starting to develop here. So I've just gone with a really small position here to start with. And then I'm hoping if it moves up here, keep showing the right signs, I might add to it on the next sort of consolidation.
Very nice. Well, they're the ones to look at this week. And we know that you have prepared a lot for the model books, and we're going to record one later today. There are 2 that we've already recorded, model book 1 and 2. So we say thank you very much for you producing these, and then we'll also share that 3rd model book that we're about to delve into right now. So thank you very much, Gary Glover from Novus Capital.
Thanks, Chris.
For those who want to see and understand more of the market leaders, a bit like this sort of movement with News Corp, but longer, further, stronger, and greater gains, click on screen to see the model book number 1, where Gary delved into 5 of the ASX's best performing companies over the last couple of years and broke down into the most critical detail of how and where the setups are, how to analyze the charts, and how to use that knowledge to identify the next market leaders.